Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
Responding to soaring inflation, the Reserve Bank of India on Wednesday again nudged up the repo rate by 50 basis points, just a month after raising it by 40 basis points in an off-cycle meet. The two back-to-back hikes have taken the benchmark rate to 4.90%. And it is also a no-brainer that this move will push up borrowing costs. Home loans will become dearer and so will others like auto loans. What should depositors and borrowers do in this scenario? Let's find out in our first segment.
After a surprise rate hike in May in an off-cycle meeting, the Reserve Bank of India's Monetary Policy Committee on Wednesday unanimously voted to increase the benchmark policy rate by 50 basis points. Thus, the repo rate now stands at 4.90%. Consequently, the standing deposit facility rate stands adjusted to 4.65%. The marginal standing facility rate and the bank rate stand adjusted to 5.15%. The Monetary Policy Committee voted unanimously to remain focused on the withdrawal of accommodation in order to ensure inflation remains within range going forward while supporting growth. The real GDP growth forecast for FY23 has been retained at 7.2%. GDP growth in Q1 is seen at 16.2%, in Q2 at 6.2%, in Q3 at 4.1% and Q4 at 4.0%. Meanwhile, the inflation projection for the year has been increased to 6.7%. Inflation in Q1 is seen at 7.5%, in Q2 at 7.4%, in Q3 at 6.2% and Q4 at 5.8%. Furthermore, the MPC noted that inflation is likely to remain above the upper tolerance band of 6% through the first 3 quarters of FY23. So, what are its implications for depositors? Usually, the increase in bank deposit rates is not in sync with the repo rate hike by the RBI. Banks hike their deposit rates by a lesser amount. For example, banks had hiked rates by 20 to 30 basis points on an average after the 40 basis point hike in May. And more rate hikes are expected in the near future with inflation continuing to remain high. BankBazaar.com CEO Adil Shetty told Business Standard that investors who have a lump sum amount should deposit it in a fixed deposit of 3 to 6 months. He said once these deposits mature, they could consider locking into FDs of longer tenure, depending on where deposit rates are at that point.
Experts are of the view that locking into a fixed deposit of a longer tenure would be a mistake at this juncture. Wait for 6 months. If at that point of time you feel that interest rates on fixed deposits have peaked out, then you may invest for a longer tenure of 1 or 2 years. Investors with a larger amount to invest should try and ladder their investments. What does laddering mean? Suppose that you have 3 lakhs to invest. Then the first lakh should be invested in an FD with a tenure of 3 months. Another 1 lakh should be invested in an FD with a tenure of 4 or 5 months. And the third tranche of 1 lakh should be invested for 6 months. Now, why do we do that? It is impossible to guess whether the peak FD rate has been reached. Instead, if you have money coming back to you at regular intervals, you will be able to stagger out your investments and you will be able to average out the returns on the higher side.
There are other options too.
Capital markets currently are pricing in steep rate hikes, which basically means as inflation is going up, market is already pricing a terminal repo rate of 6.5 to 7%, which basically means that over a period of time, even if repo rate as and when reaches 6.5, the current interest rate structure in the market is already pricing that. Now, if you have to look at how this poses is in terms of products and different options available for investments. For example, if we have to compare it fixed deposits, so let's say 1 year fixed deposit currently would be around 5.5 for good banks. At the same point in time, if you see the capital markets, let's say debt funds, a 1 year T-bill would be at around 6%. 2 year GSEC would be around 6.25, 6.5, 3 year would be 6.5, 6.75. So over here, debt funds or capital markets currently are giving you earnings or accruals, which is already discounting the future risk of inflation and hence much higher accruals and earnings as compared to a bank fixed deposits. Also suited to this cycle is something like a floating rate fund category, wherein the interest rates or the earnings of the scheme move with the interest rates in the economy. So if we expect interest rates or repo rate to go up, the earnings of that fund category also go up. So debt markets, debt funds currently are giving you a number of options, good pricing, good point to enter, much contained risk. We might have to live with near-term volatility, which is okay for investor who is seeking stable returns and investing for a longer period of time.
And how should borrowers position themselves? Most longer tenure loans, such as home loans, are floating rate loans. At present, only a small percentage of home loan borrowers are on fixed rate loans. Even there, the rates would be fixed for a limited tenure of 2 to 3 years, after which they are liable to be reset. Compared to floating rate customers opting for fixed rate loans would be paying around 2 to 3 percentage point higher rate. Meanwhile, shorter tenure loans such as personal loans and auto loans are likely to be at a fixed rate.
We spoke to Arvind A. Rao, a certified financial planner and founder of Arvind Rao and Associates, and he told us that borrowers who are beginning to feel the pinch of higher EMIs should look to prepay their loans. If your salary has gone up in the last couple of years, then you should even look to increase the EMI that you pay. That will ensure that your loan tenure remains constant even in a rising interest rate scenario. Adil Shetty, CEO of bankbazaar.com, suggests that all borrowers should look to prepay at the rate of 5% of the principal outstanding for that year. He says this is an optimal rate of prepayment. And why does he call it optimal? Because everyone can manage a 5% prepayment. Also, keep a close eye on your credit score in this rising interest rate scenario. Reason being that if since the time when you took your home loan, your credit score has deteriorated, then your lender reserves the right to hike the interest rate on your home loan.
Clearly, inflation remains the wild card. It will be closely tracked by the RBI as well as individuals, given its impact on everything from household finances to loan burdens and investment strategies. From a macro perspective, it remains to be seen how the RBI's actions rein in inflation.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Shrugging off Monday blues and the uncertainty surrounding the country's economy, at least 3,300 workers of 70 firms, ranging from small shops to big multinationals, smiled their way to work beginning this week in the UK. They will work for just 4 days a week without a pay cut for the next 6 months. The pilot scheme has been launched to test the waters. Wondering if we too can follow the Britons? Keep watching as we answer this question for you.
After over 2 years of mayhem, the world is heaving a sigh of relief. COVID-19 seems to have lost its sting and its spread has been contained. No one knows if it is the new normal or another wave will strike the world again. But in the meanwhile, life has returned to normal. A lot of people have resumed offices. Some joined willingly, while a lot of them were told to do so. The pandemic has also forced companies to do a rethink on work culture. There seems to be no fit-for-all solution and a churn is going on. Amid this churn and the struggle between employees and employers, a news from Britain has caught everyone's attention. The world's largest pilot scheme of 4-day work week kicked off in the UK this Monday. Over 3,300 workers from 70 firms have signed up for this trial for 6 months. It is being organized by the not-for-profit 4-Day Week Global with the think tank Autonomy and backed by researchers from Cambridge and Oxford Universities and Boston College. It is not just Britain. Spain and Scotland are also planning to start 4-day week trials later this year, and the initiative is being backed by the government. The organizers of the UK event claimed that a similar trial in Iceland was an overwhelming success. The Philippines, too, is toying with this idea. Calls for shortening the work week have been gaining ground worldwide for years. Pandemic gave it a little more urgency. Citing several examples, experts claim that it will improve the productivity of employees.
Say a decade back, it was a 6-day mandatory work option which any employee had. And then there were discussions happened around productivity, work-life balance. And then the whole piece moved to a 5-day week. Currently, there have been news and talks of shifting to a 4-day working week regime. And this will be done without any compensation cut. Although it was mostly tried as an experiment during the global crisis, but the idea of a 4-day work week gained international attention when it was observed that despite reducing the number of working days, productivity remains more or less the same or even increase in a few cases. It has also improved employees' well-being and paved the way for a better work-life balance. I don't see that why can't this be done from an Indian context. One of these proposals for the new labor code is the option to shift to a 4-day working week. So in India, employees work for about 48 hours a week. And as per this new proposal, the number of working hours in a week is set to remain the same. But it would not be feasible to shift to a 4-day working week for industries such as manufacturing, agriculture, healthcare could be another one which we can think about. Now, workers are not allowed to work for more than 8 hours a day. So a 4-day work week will not be possible in this sector due to the regulations and the nature of the work what need to be carried out.
So, will employees in India also see a similar work model in the days to come? The government has come up with the new labour codes which it plans to implement in the next financial year. It may pave the way for a 4-day work week. A number of aspects related to work culture, including the take-home salary of the employees, working hours, and the number of weekdays will be changed. The government has already finalized the rules under these codes, and now states are required to frame regulations on their part as labour is a concurrent subject. The government has also said that if the proposal comes through, employees have to work 12 hours on 4 days as they meet a 48-hour weekly work requirement.
In India, it's going to take some time where we can adapt and accept this working model. While in the technology field or corporate offices, banking, financial, insurance sector, it might still be a possibility to implement and execute it. However, when we talk about the manufacturing, agriculture, healthcare, it is definitely a distant dream to even think about a 4-day working week. So while we talk about the flexibility, we talk about improved productivity, mental well-being, and the physical well-being as well. The 4-day working week actually provides the improved productivity in certain areas. But when we talk about a holistic level, there are certain industries where it might not be possible, especially in India, to implement and execute this working model. In my opinion, this is still at a very initial stages or proposal stages right now. The Indian government has proposed these changes and have given the opportunity to the corporates, to the states to be think about it and discuss within their regime whether it's possible or not. I personally feel that the future will be all about global talent and global opportunities. and it will be outcome based, a working model. As long as a person is able to deliver a stipulated work in a defined time frame, and that time frame can be chosen by the individual, I think organization would be okay to accept as and adopt to any of the flexible working models. It can be 4-day working week, it can be 8 hours a day, 12 hours a day, 9 hours a day. So it totally depends on an individual in how much time the person can define and deliver the expected outcome. While the organizations and the federal system can do whatever they can do at their end, however, at the end of the day, the expectation is that the work should be done.
There will obviously be teething problems in the beginning, like what a lot of companies witnessed during their shift from 6 days a week to 5 days. But there is no reason why Indians cannot enjoy the 4-day workweek model. The government has already proposed it to the industries in labor codes. But different sectors have different requirements and they will have to adjust it according to their needs.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Four-day work week may help Britain in tiding over the economic slowdown. Meanwhile, back home, RBI expects the inflation-inflicted pain to last for 3 more quarters as it raised the repo rate. However, the forecast of normal monsoon may also take pressure off the RBI as it will cool off inflation. So, how should one approach the monsoon-related stocks? Here's a report.
To shield a weak economy from inflationary pressures and bolster economic growth, the Reserve Bank of India's Monetary Policy Committee unanimously decided to turn hawkish and withdraw liquidity in a calibrated manner. Given the boiling crude oil prices and supply-driven bottlenecks born out of the Russia-Ukraine war, the RBI raised inflation projection by 100 basis points to 6.7% for the year, but retained growth outlook at 7.2% for FY23. Though the governor hinted at a faster economic recovery after India's services PMI touched an 11-year high in May on strong demand, an elevated inflation level could pinch consumers' purchasing power. While the FMCG sector will remain under pressure due to deepening inflation levels, analysts expect the interest rate-sensitive stocks too to remain subdued in an inflationary and a rising interest rate regime. As investors digest 90 basis points within 2 months, Kunal Walia of Waterfield Advisors anticipates volatility to persist across markets as banks sit on a rate hiking spree.
The home loan segment, which is one of the critical segments of the country, will see the rates move up pretty swiftly. Already it has gone up based on the previous rate hike. And another 50 basis point is just going to increase the EMI payments of the existing borrowers, and the new borrowers are going to get rates at a much higher rate. So that is one segment we need to be sensitive about. So it is positive for various banks and NBFCs given that they will be able to raise the rates. But one needs to be very cognizant of the fact that where it is positive on one hand, it becomes very difficult for borrowers to digest almost 90 basis point of rate uptick, which RBI has already started, or in fact given in last 2 months or last 3 months. So that's the starting point. The worrisome part about the policy is that the inflation estimate for the RBI has gone up by almost 100 basis point from 5.7 to 6.7. So at this point in time, they continue to maintain the GDP estimate at 7.2%. I think given that inflation eats into purchasing power and you add some kind of a higher borrowing cost, actually there would be some kind of a slowdown which will come through in the economy towards second half of this year, and maybe RBI may revise the GDP estimates globally as well. Because most of the central bankers except China and Russia, everybody is on a rate hiking spree. We saw this with Reserve Bank of Australia as well yesterday, where they surprised the market with a 50 basis point rate hike. US is pretty much going to follow suit with a 50 basis point rate hike. And given that most central banks are following a front loading of policy rate hikes.
However, the promise of a better than expected normal monsoon forecast by weather agencies IMD and SkyMet can bring global food prices under control. The RBI too hopes that the normal monsoon prediction will help sustain rural demand and overall crop output, thereby giving them an elbow room to go slow on rate hikes. As the southwest monsoon contributes nearly 70% of the country's annual rainfall, it remains critical for the agriculture sector. Analysts believe that a healthy summer crop production would boost farm income and increase demand for farm-related equipment.
The expectations that we're going to have a normal monsoon that would definitely yield positive for the rural economy demand, and sectors usually get benefited are like FMCG, and then we have tractors from the auto segment which gains traction. Apart from that, fertilizer also witnesses decent demand. But considering the scenario that we are in, because the FMCG companies are witnessing pressure due to raw material, rising raw material and other things, that might not lead to a broader recovery in the FMCG pack. So one needs to be selective. But other than that, tractor and fertilizer is definitely one can look at.
As regards today, investors will watch out ECB's policy stance and US unemployment data.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Just a few hours' drive from Mumbai's Ritzi Dalal Street may introduce you to some grim realities. Rising cost of living and decreasing job opportunities are increasingly fueling rural distress, and people are falling back on MGNREGA to earn their daily bread. In May this year, over 31 million households sought work under MGNREGA, almost 11% more than the same period last year. Our next report tells more about this flagship scheme, which has emerged as a savior in these tough times.
The Economic Advisory Council to the Prime Minister, led by Chairman Vivek Debroy, recently suggested that the government should come out with a guaranteed employment scheme for the urban unemployed, as well as introduce a universal basic income and allocate higher funds towards the social sector to reduce inequality in India. It said that looking at the difference between the labor force participation rate in rural and urban areas, the urban equivalent of schemes like MGNREGA that are demand-based and offer guaranteed employment should be introduced so that the surplus labor is rehabilitated. The Government of India had passed the Mahatma Gandhi National Rural Employment Guarantee Act in September 2005. The mandate of MGNREGA is to provide at least 100 days of guaranteed employment in a financial year to every rural household whose adult members volunteer to do unskilled manual work at the statutory minimum wage. The Ministry of Rural Development or MRD monitors the implementation of the scheme in association with state governments. This act was introduced with an aim of improving the purchasing power of the people living in rural areas. Primarily, semi or unskilled work has given to people living below the poverty line in rural India. Adult members of rural households submit their name, age and address with a photo to the Gram Panchayat, which registers households after making inquiries and issues a job card. The job card contains the details of the adult member enrolled and his or her photo. The registered person can submit an application for working in writing for at least 14 days of continuous work either to panchayat or to program officer. The employment will be provided within a radius of 5 km, and if it is beyond 5 km, extra wage will be paid. A majority of the works that are notified under MGNREGA are related to agriculture and allied activities, besides the works that facilitate rural sanitation projects in a major way. MGNREGA is a demand-driven wage employment program, and resource transfer from the center to the states is based on the demand for employment in each state. It provides a legal guarantee for wage employment by providing allowances and compensation, both in cases of failure to provide work on demand and delays in payment of wages for work undertaken. The process of reviewing official records and determining whether state-reported expenditures reflect the actual money spent on the ground is called the social audit. It includes an audit of the quality of works being executed at different levels, along with the details of disbursements made, the number of laborers employed, and materials used. The people in coordination with local administration conduct the social audits, whose objective is to ensure public accountability. In FY22, the centre had budgeted 73,000 crore rupees for MGNREGA, but ended up spending almost 98,000 crore rupees due to continued robust work demand. For this fiscal, the government has allocated 73,000 crore rupees for the scheme in the budget. More than 2.4 crore households are seeking work under MGNREGA, and the number of active workers stands at 14.89 crore.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Distribution of funds also brings to the fore friction between the centre and the opposition-ruled state governments. On Tuesday, thousands of TMC workers hit the streets across West Bengal in protest, alleging that the centre was not releasing MGNREGA funds. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.